You're listening to the Learn Like a CPA podcast, where we talk about all things real estate, tax strategy, and personal finance. Whether you're a real estate investor looking to scale your portfolio, or you're an individual wanting to take your financial freedom journey to the next level, this is a podcast for you. Hey everyone, before we get into the podcast today, I want to tell you about a brand new educational opportunity that I'm offering. Coming up in February, I'm releasing a comprehensive tax course for short-term rental investors. This course is designed to teach you everything you need to know to make confident tax decisions that will save you hundreds of thousands of dollars over the course of your investing journey. Listeners of the Learn Like a CPA show can use the promo code PODCAST20 to receive 20% off of the course. To learn more, go to the link in my show notes and you can sign up for the pre-launch. There you will be notified when the course drops. And now let's get into the show. Welcome back everyone to the Learn Like a CPA show. I'm your host, Ryan Bakey. Today we are going to have the podcast to end all podcasts, topics, conversations, comments, blasphemy on the internet about LLCs, limited liability companies. If I could telepathically communicate with every single American at one time, I would tell them that you can deduct the same expenses from your business or rental property whether or not you have an LLC. I repeat again, you can deduct the same expenses for your business or rental property regardless of if you have an LLC or not. Please understand this. There's so much going out there online that people say, you need to have an LLC to deduct those expenses. You need to have this, you need to have that. No, you do not. The LLC is what it stands for, limited liability company. It is to separate you from your business. It is to separate your business from you. It has nothing to do with tax purposes for now. A single member LLC is a disregarded entity for federal IRS tax purposes, which means it is not going to file a separate tax return. Instead, you're going to file your business LLC with your personal return, whether or not you're using Schedule C if you have a business, or you're using Schedule E if you have a rental property. Now, if you have a multi-member LLC, so if you have more than one member in your LLC, you will need to file a partnership tax return for that LLC. That is going to be a separate tax return than your individual tax return. Now, keep in mind that this LLC, multi-member LLC, is due March 15th, not April 15th. So April 15th is a normal deadline for American taxpayers. However, for business entities like S corporations and partnerships, the deadline is due March 15th, so a month before. What does an LLC actually do for you? An LLC will provide limited liability protection from your business and you from your business, right? So if I have multiple businesses and they all have separate LLCs, that's to shield and protect them from each other. If I have 3 or 4 rental properties and I have rentals in each LLC, that is what it's there for, is to protect my assets from other activities. Let's say something goes wrong in my personal life and somebody's going to come sue me. Well, they're not going to be able to sue my business because it is separate from me. It's going to show vendors, customers, creditors that you are serious and mean business. All right, if I solicit myself as somebody who's, let's say, I have a landscaping company and it's just me as an individual versus me as a business representing my business, I'm going to look a lot more serious to those potential vendors, customers, creditors, because I have this business entity name. It's going to provide separation from my business and my personal funds. Remember, we never want to commingle funds together. So if you have personal expenses, keep those separate from your business or your rental property expenses. You have to keep them separate. You're able to operate out of a business name or business entity rather than your personal name. So I see this all the time when people start small businesses or they have rental properties where they need to pay contractors, for example. They need to issue 1099s to contractors. Well, if you don't have an LLC with an EIN number, we're going to get into that in a second. If you don't have that, you're going to have to issue that 1099, or you're going to have to report to vendors, hey, it's me. Here's my name. Here's my social security number, rather than, oh, this is my business. Here's my business EIN number. If you are running a normal trader business, you may have your LLC elect S corporation status to save on self-employment taxes. Now, I know that I mentioned before that LLCs will not save money on taxes. However, if you have an LLC for a normal trader business, so a CPA firm, a content course creation business, walking dogs, any sort of thing that's generating ordinary business, you could look to elect S corporation status in order to save money on self-employment taxes. Now, if you go through some of my previous podcasts, I do have a podcast that lays out the S corporation, who is it for, who needs it, when to set it up, etc. And so I would highly encourage you, if that's something you're interested in, to go check out that podcast. What an LLC won't do for you: it will not allow you to deduct everything and anything under the sun. So just because you run your personal hygiene expenses through your LLC, or your vehicle through your LLC, or fill in the blank bill through your LLC, it doesn't mean you're going to automatically be able to deduct that, right? That expense for your business has to be ordinary and necessary to your business. You can't, just because you have everything under an LLC does not mean you're able to deduct anything and everything. And remember, you get the same deductions whether or not it's an LLC or not. It will not make you bulletproof against the IRS. So a lot of people will say, hey, well, if I have an LLC, I'm going to be able to take all these expenses, and the IRS is going to see that as business expenses. Well, not necessarily. They're going to say, hey, you set up this LLC here. You have a lot of expenses that are personal in nature. We're not going to allow you to take these. Just prove to us that you actually need to spend these in your business. That's exactly what they would say. It will not make you bulletproof against creditors or potential lawsuits, etc. Just because you do have an LLC doesn't mean you're fully 100% covered. And in fact, most single-member LLCs in certain states, because they're disregarded from a federal level, a lot of states will also disregard them as well. Now, before I go on any further, I will say, speak with an attorney that is going to help you with your entity structure and your asset protection. You should not be speaking with an accountant or your brother-in-law about asset protection or entity structure. Please speak with somebody who's qualified to do that. In regards to LLCs, a lot of people will say, well, do I set it up in my home state? Do I set it up in where I'm doing business? General rule of thumb is you're going to want to set the LLC up in the state that you're either doing business or that you have a rental property in. So I live in Illinois, but I have rental properties in different states. So I'll have LLCs that are set up in each state that own that particular rental property. That's kind of a question that I get. The steps to set one up: the first step is you're going to register paperwork with the Secretary of State. So if you go on IllinoisSecretaryOfState.com, you can fill out some paperwork and pay a fee to register your company and get an LLC. Once you do have that, you're going to go on the IRS website and register for an EIN number. Make sure that you use your single member LLC as your business name. Once you have your articles of organization, your LLC paperwork, as well as your EIN from the IRS, you're going to go to a bank and open up a business bank account. Now, keep in mind, you're going to need, again, you're probably going to need your EIN number and your articles of organization in order to do this. LLCs need separate banks, books, and records, right? So for every LLC you have, you need to keep a separate financial statements, books, and records. If you're dealing with rental properties, you want to make sure that the title, the deed, and the loan are in that LLC. You do not want to have an LLC but not have the title or the loan there. It is absolutely pointless to do so. Again, each LLC needs to have separate books and records. And then lastly, beware of any state filing fees or potential tax returns. So I mentioned before, on a federal level, the LLC is disregarded, so you don't have a tax return. But most states have filing fees, or some states, if you're dealing with California, New York, Tennessee, Texas, they will have tax returns that you need to file for the LLC. Now, as far as the annual statement that you might have to do, Illinois is pretty simple, at least for me. It's, hey, were you in business last year? Okay, cool. Sign your name, pay $75, and that's it. Whereas some states, they have higher fees and they're more challenging to fill out. So another common question that comes up a lot is, do you need an LLC for each property or entity? Again, this is more for an attorney to answer, but because I've been doing it so much, I can explain what are some of the factors that we look into. Well, number one is going to be the amount of equity that you have in each rental property versus your personal net worth. So a lot of people will say, hey, as soon as I get a certain amount of equity in each property, I'm going to put it into an LLC because now I'm at risk for all this equity in a property that I don't want to lose. State filing fees. If you're in a state that has a high filing fee, I'm looking at California, where it's $800 per LLC, you're not going to want to put each property in an LLC if it's going to cost you $800 each. Lastly, too, is it depends on your buy-in. So if you are very bad at keeping records, piss poor bookkeeping, etc., then you don't have the proper systems in place to even be setting up LLCs in the first place. If you can't handle the basics, you're not going to be able to handle the more advanced things. So setting up entities is probably not right for you. And then lastly, let's remember the golden rule. So rental real estate, anything that goes up in value, rental real estate primarily, should be held in your personal name with a good umbrella insurance policy, a single member LLC, or a multi-member LLC that's taxed as a partnership. We do not want to hold rental real estate in S corporations or C corporations due to some very adverse tax consequences. However, remember, if you have an ordinary business activity, so if I'm a flipper, a wholesaler, an agent, etc., I may want to look into setting up an LLC and having it taxed as an S corporation in order to save money on self-employment taxes. Thanks for listening to the show today, guys. We clearly define what an LLC is, what it does for you, what it does not do for you, and the steps in order to set up one. If you like the content, go ahead and save this podcast, and if you have any further questions, you can find me on Instagram and Twitter at LearnLikeACPA. Thanks again, everyone, and I'll see you in the next episode.